Really pleased to be able to talk to you today. I think when we started looking at these slides, the first thing which Steve's kind of said is, could flood resilience be normalised by 2025? And from my point of view as an insurer, sorry about that, but as my position is, I could say no and walk off stage, right? Is that not what you wanted to do? No. So we've widened it out a little bit and talk about, would it ever be normalised? And one thing I'd just perhaps explain just very, very quickly, I know we're short on time, is that is the terminology actually. So it's something we've been working through, myself and Steve, through DEFRA groups, and even into groups I've been involved in, sort of national flood forums, particularly in Scotland actually. But resilience, resistance, there's different terms to these things, and I'm sure you're all on the same page, but just in case you're not, flood resistance is, from our point of view, is to try to keep the water out of a building, which obviously from an insurer's point of view is going to be positive, isn't it? And for customers and for house owners, nobody actually wants their house to be flooded, so if we can keep it out, fantastic. But as time has moved on, it's been apparent to me and to others that actually resistance is futile, they say, don't they? But in this case, actually, quite often you're just not able to keep that water out, and where normalisation of this is a problem. So resilience is very much about living with water. The terminology has changed a little bit in some of the groups around recoverability. So live with water, get it out quickly, dry the property out and get back in. And if you can do that as quickly as possible, obviously fantastic. And we've had examples across the country where, because of the supply chain for repair, people are outside of their properties, in the northwest particularly, in Cumbria and Carlisle, where it can be over 12 months before you're back in the house, but you just can't get it dried out and you can't get the resource to get it done properly. So, as an insurer, I'm going to talk about stats. Apologies for that. I'll try and keep it brief. But from our point of view, flooding costs a lot of money. It's in the billions. We're probably looking at average these days of around about £1 billion a year. Now, what insurers want is to try and avoid a shock. So we get a very big event where there's thousands of properties flooded in one sustained area, which is pretty normal. In those circumstances, we are very worried about those things because of the things I've said, but also we want to be able to normalise the fees and the costs to everybody. You pay all your insurance premiums, I pay my insurance premiums. Nobody wants a huge hike in prices, last thing at the moment, of course. But we do deal with the billions of pounds of damage. And it will be said, actually, that flood defences do reduce that amount. And I think it says here £2.1 billion without flood defences in costing as an average there. But when you talk about insurance premium, I hear an awful lot. If I put resilience into my property, are you going to reduce my premium? It's probably the classic thing we hear. The sad reality is that your insurance policy covers you for an awful lot of events, and flood is just one of those. So you've taken a small part of that pie for flood. So the margins for these things are actually really, really, really tight. So there have been things done by government to try and improve the situation when we're talking about putting a property back together following a flood is to have a grant. So I'm not sure, obviously, I guess you're all over the country today, but certainly you might be aware of grants that the government have released and invoked it at certain situations, certain peak events where they'll say, actually, yeah, you can have a £5,000 grant, and that will go across some small businesses as well, not just residential. Which is a good thing, good soundbite for the government. We're helping everybody out, but the reality of that £5,000 is it actually doesn't go very far at all. We've seen a lot of examples where the funding is given to the local authority, and we see huge changes in how they deal with that. From some local authorities will say, go to B&Q, send us your receipts and we'll refund you whatever it is, to others taking it far more seriously, and let's put a plan in place, let's deliver something for the whole community. That might start eating into that £5,000 per property. So what are you left with in terms of actual property protection? And our concern as an insurer actually for these, one is that a lot of it, because it's a few years ago when some of these grants were given, actually was a time when resistance probably was the way that we looked at it, try and keep that water out. And a lot of things were deployed with things like demountable barriers across entrance doors. Well, we've seen examples of those being used as garden gates the year after, or sold on eBay, actually, which was nice. So there's no confidence from an insurance company to be able to say, we recognise these, My role in AXA is I'm head of business resilience, which is effectively risk management, try and reduce and mitigate loss. We take no confidence in these systems because the amount of money that's being spent often isn't just anywhere near. It's a partial solution often. Somebody's got to give extra funding to be able to make it holistic for the building. So there's some real challenges in those sort of situations. And of course the insurance market, I'd ask for a show of hands, but I reckon it'd probably be pretty much all of you, that when you buy your home or your car insurance, you go online for that. You don't walk down to your local insurance company, because they probably don't exist like that anymore. You don't go to an insurance broker. You go online. You go to the websites, the compare the markets of this world, actually, to buy your insurance. So that transaction is electronic, and it's a pre-filled set of questions that you've got to give yes or no's to. They know information about your property already. They know if it's detached or semi-detached, probably how many bedrooms you've got, and they're just validating certain things. There's no box on that list to go, oh, by the way, I've installed all these things. So myself and Steve's been included in this as well. For many years, we've been trying to get to the point of how do you recognise when somebody's put these benefits in to their property, so we can consider that to be a reduced risk, and therefore that has implications on, or positive implications on, one, premium, but actually your criteria for acceptance, because others will say, no thanks, not interested. But as I said before, we're looking at shocks to the market, and say sometimes, I think 2005 was something like a £3 billion hit. So we have to deal with those, and we want to sort of spread it out the whole way. And the insurance companies actually use some very sophisticated data to look at your property, to know whether it's at risk of flooding, taking into account frequency, severity. We recognise defences that the Environment Agency have installed. Sadly, SEPA in Scotland don't let the insurance industry have any defended data, so they don't get the benefit of that, which we've been banging on their door and having meetings with them, but it's apparently local authority data, so we can't touch it. And they think we're going to sue them every time there's an event where the flood defence hasn't quite worked as they thought it would do. But we don't do that effectively. You heard it here first. So are you all familiar with Flood Re? Is that something that you're aware of? So for anyone that's not, Flood Re is a scheme so that we can take these shocks out of the market. That insurance works on the basis of it's a lot of money by all the people that pay in to deal with the claims of the few. And Flood Re is taking that separately. So Re stands for reinsurance, so it's a flood reinsurance scheme. And every insurer that is involved in that will pay a levy to basically be part of it. And it's around about £150 million a year to actually allow these things to run. But the insurer then chooses what customers it wants to seed into that. And depends on your insurance company. Some might want to, what they call, de-risk their book and throw everything in. If it's going to get wet, if it's going to rain, stick it into Flood Re. Others might be a little bit more optimistic and go, actually, there's only a chunk of them we'll keep the ones for ourselves, actually. But you pay an extra premium for your Flood Re participation. You won't know that necessarily because it's all in the background. Your insurance company is now offering you flood insurance that maybe a few years ago might not have been available or have been a huge amount of cost. It's the analogy of a 21-year-old Ferrari driving Premier League star who wants to insure that Ferrari. There's not many out there. A really high-risk flood property kind of falls into a category where lots of insurers start to back away from it, and the mics don't work then either. So you have this seeding fee, which goes up to £1,200 for the highest council tax band. It can be just as low as £169, and that you are pushing that into Flood Re. So those high-risk customers are then basically paid through that scheme. It works well, but it's not going to last forever. 2039 is the period that this is actually going to cease. And then it will go back to what we call risk-reflective pricing, which means there's no backup of these plans. Everyone's out. You've got to decide whether you insure it or not, and that will be another shock to the market if that goes without a solution. Now, again, we don't take into account the benefit of £5,000 grants because we don't know what's in the property. We don't know if it still exists. We don't know if it's being maintained. We don't know whether it was actually deployed and specified in the right place at the right time. So it is a challenge. I'm not going to go through hardly any of these, but not everybody can go into Flood Re, certainly not if you're commercial property, certainly not if you were built after 2009, because insurers don't want properties to be built in floodplains or could be at high risk in the future. So for time, I'm not going to pick on anything else there. You can see those for yourselves, hopefully. But there is some progress. It sounds like insurers aren't really interested in flood, and Flood Re solves everything, just let it continue. But we have a a social conscience, would you believe, in the insurance industry? We really do. And obviously these are our customers that are being affected by incidents, and they say nobody wants it, and it's a devastating thing to be flooded. I personally wouldn't want to live through that at all. I've had an escape of water claim at a house, at my property, which affected about half of it, but flood with dirty water and sewage and everything else is absolutely horrendous. So what has been proposed and is now live in some circumstances is something called Build Back Better. So has anybody heard of Build Back Better as part of Flood Re? Yeah? Okay, so again, just for those that haven't. So this is £5,000 was sort of last week's news. It's coming to £10,000 for Build Back Better. So this was a real challenge for a lot of people in the insurance industry, because our view is that you pay claims to put people back in the same position that they were before. No insurer wants to give extra money to reduce their risk. Sounds counterintuitive, doesn't it? But we want to pay the claim to put you back. And AXA wouldn't want to pay an extra £10,000 to be kind to that customer, because they'll say, thanks very much, next year I've gone to Aviva. And the market will move around with those sorts of things. So it was a challenging thing to embrace that, but Flood Re has let that happen, which is really, really good. And it's trying to avoid a lot of contractors that are in it for the quick buck, making sure that there's good governance and controls, and Steve's already alluded to, there's codes of practice to ensure that it's very robust, to make sure that who's going to be surveying the property, who's going to be installing and maintaining and servicing equipment actually is done to a good level. The challenge with that, of course, is that often floods are quite regional, so it doesn't mean next year the same thing's going to happen, and the resource has to be able to live throughout the next 10, 20, 30 years or whatever. And we've seen lots of companies that were providing flood defence products actually go to the wall, because frankly they were really big in the years of the flood. And we talk in the insurance industry about hard and soft markets. They kind of have wet and dry markets. So if you're in the lean dry years, how do you survive if there's no customers being flooded to want to do it? But let's be honest, that a £10,000 fee is good on the basis that during a claim it's the perfect opportunity to do it. You're stripping the building back quite often. That's the time to put the protections in and make it resilient, so that it will last through hopefully generations, and avoid products that are going to require an awful lot of maintenance. Yes, there is a hybrid solution sometimes where you might have things like pumps being installed to take water away. But we're talking about, maybe removing timber ground floors and making it concrete if that's possible, and planning obviously has an issue. Raising of electric, simple stuff, but also looking at sort of waterproof installations and lime plaster and those sorts of things. So actually those should live for a long time, which would be beneficial. The one thing about Build Back Better is the commitment, if you go into it as an insurer, is you also have to give that £10,000 benefit to customers that flood who haven't seeded. So if you think of properties on a hill, and you've got the properties at the bottom that are really high risk of flooding, as you go up it reduces down. Some insurers may only seed the ones in the really high risk, but if you're in the next level up and it's a moderate or low risk, they don't seed them, but it's a big event, then you've got to still pay not only the claim, you've got to also pay the seeding fee as well. So, sorry, not the seeding fee, the Build Back Better, the £10,000. So there's a financial hit to the insurers where that happens. So it's not taken off quite as quickly as perhaps the government would have liked, because the insurers are busy working out the funding to how they can actually allow these things to happen. So I do put that point there, that is £10,000 enough. Often a flood resilient kitchen is going to cost you 10k or more, and then your money's gone, so that's only a partial solution. And it's difficult for insurers then to say, I'm sure your hearts bleed, but it's to say, well, we don't know actually how much benefit these protections are going to have. We have to know the facts to understand what we can do in terms of premium and everything else, and allow these sort of schemes to continue. We just don't know what that's going to be. As mentioned before we hear it a lot. Where's my discount? I've put these things in. In the old days, it used to be put an intruder alarm in, be part of a neighbourhood watch scheme, we'll give you 5 or 10%. Flood has never been that big a chunk of the premium, actually. It's increasing. Escape of water is nearly as big a loss type to insurers as it is for flood. And both of those are actually higher than theft these days. But the premium for flood isn't always that high, and obviously a lot of it's going across to flood re now. The one thing I'd say is probably a plea, and again it goes back to events that are not normalised, that it's a regional aspect to it. Often are the contractors there to put these things in, to install it at the right time, because there's always a surge event when it's a flood, and you could have thousands of properties that are damaged, and if they're all going, yes please for my £10,000, how long is that going to get? Is that going to delay people getting back into their properties because the resource isn't there? So that's a real challenge to me as to how we get that resource in place and for the duration, for longevity. There's a question which I don't know the answer to, so I've put it out there, is because some customers might get a flood grant given and also Build Back Better. I'm sure the government's thinking about that, because they may be seeing this as a bit of a replacement for it, but not everybody's going to get that. Not everyone's going to get that benefit, are they? So if they could be smart about it and go, yes, if you get Build Back Better, we won't give you the 5. But conversely, if you don't get the benefit of that, you've got your 10, that'll be a different way. So yeah, we know flooding, climate change is getting worse. And we think as an insurance industry, I'm probably the spokesman for it today at least, that we're seeing a rise in number of properties that are at risk of flooding. JBA, who you might be familiar with, up in Skipton, they're now saying that 1 in 4 properties in the UK are at risk of flooding. Not entirely sure I agree 100% with that. It's a bit of a headline figure, but they are very good at these things, but 1 in 4 seems quite a lot. Insurance only exists if it's tolerable fees, that we get that balance right. I have lots of conversation with people thinking that insurance companies make huge profits. We don't. A good year is probably a 2% profit margin. So we have struggles with the amount of costings that these things are, and flood reinsurance schemes help. But I say they've got a finite lifespan. We have to sort of take that into account. The thing for me, and actually something myself and Steve have worked on before, is, and I've mentioned it already, is how do we recognise these properties so they can go back and actually take them out of flood re. So if we have surveyors who are making a competent decision to say these are the biggest bang for the buck, these is going to reduce and mitigate your flood risk, we need a database of some description to be able to recognise that they're there and actually is reducing that risk, and we go, okay, that's fine. So I deal with commercial property quite a lot, and there's a massive benefit for having sprinklers in a commercial building, as you might imagine, and all the myths we dispel constantly about how sprinklers work. But that's our job, that's what I do. We reduce risk down to make it tolerable in terms of insurance risk and insurance premium. So if flood re can take these properties and go, you've got to Build Back Better, the end game surely has to be that they come out of flood re and it goes back to the market. But there has to be a confidence to the insurance industry to say, yeah, that is really reducing it. It wasn't a partial solution. So that's probably one of the most of challenging things. And I say the clock is ticking for when actually flood re will finish. And we're getting increases. I think there's 250,000. I think it was on one of the earlier slides. I think it's 250,000 properties now in flood re. That's 70% up on 2021. So it's growing. So how are we taking these properties out? How are we making them a normalised flood risk? I just don't see it at the moment, sadly. So you say flooding was a constant, then maybe we could normalise this stuff, but floods move around the country, often northwest, but other areas as well, different types of flooding. Surface water is obviously a massive problem in comparison, probably more surface water than there is in river flooding or coastal flooding. In London in 2021, you might remember the summer floods. Lots of those went into basement flats, and there's nowhere for the water to go. It's just a big well. So they're horrendous to try and deal with, because you've got to pump an awful lot of water out, and it happens so quickly. Surface water, as we know, it's a flash flood. That's what it is, and that's why things like flood resistance doesn't work, because there's nobody there to fit these things. You've got to go out and install them. So anything that's kind of fit and forget, the words we've used before, we like. But we are kind of living with flood effectively. But what else could be done? Could there be tax breaks on the materials? The current market, I'm not sure that's palatable, but maybe we look at properties that have regulation, where there's a major refurb and reinstatement, should that consider that they have to install flood protection of some description? These are questions for government and the DEFRA groups that myself and Steve sit on. But we have to consider these things. And flood re, you know, as I said before, properties that are built after 2009 can't go in. But if it's 2009 and it's not at risk of flooding, and it's not in a floodplain, therefore, you know, you've got to question why that's the case. But that's just going to throw more into flood re, and that's a problem for us. Thank you.